Alright, y'all. I am so sorry about that. I went to stream and my computer did this weird thing where, like, only half the screen was showing, and I could not get the stream to begin, so I had to restart the thing. Y'all ever have to restart the thing? Alright, y'all. The likes will never happen on this video since it's just a few of us here. And, shout out to RB Smith. Shout out to Time for Agorism. Cam Young, I cannot really, I don't know. Are you long? Are you short? What's going on, my friend? I do not know. But let us get right into this technical analysis. Let me turn on my screen here. Here we go. Here we go. I hope everybody is doing well. Okay, right off the bat, something very important has happened yesterday, which is this. Remember how we were saying the 0.5 fib level for this fib pull from the Corona dump to the all-time high in the weekly time frame had been acting as our support, and for 1, 2, 3, 4, 5 weeks we were unable to close below it. Well, last week it looked like we were not going to close above that fib level, but just at the last moment, when all hope was lost, we came up and we closed right above it. And now you can see that this week, right now, we are still holding above this very important level. There's a lot of people defending this support right here. This level has been very strongly defended, and honestly, that's a good thing to see. That's a good thing to see. On the macro, if we're just going to look at momentum and just look at Market Cipher, we can see that, the weekly, the VWAP is now starting to point up again. Although it was looking floppy yesterday morning, it's starting to look more at attention, let's say. It's more at attention. Although the money flow on the weekly is still coming down, if we zoom in a little bit, we can see it starting to potentially come up. And eventually, guys, what's going to have to happen is this, right? We've been trading this range for so long now, and eventually it's going to break. It has to break. Ranges don't stick around forever. And it has to break. It's either going to break up or it's going to break down. Either we're going to break out of this here and see higher levels, or we're going to break below this here and see lower levels. And honestly, I think it could happen, in the next few weeks. We can see that if we're using this 0.5 fib level as the center point of this range, of course, this has nothing to do with volume. This is just a level that we have here that is very respected. We can see that we've been trading below it. We've been trading below it for quite some time. We can also see that yesterday, when we got our pump, we pretty much rejected off that 21 EMA on the daily, which is significant. That's very significant that we rejected off of that. So let's watch carefully today. If we can close the daily candle above here, I think then it's very likely we could continue up for a little bit, potentially up to the high of the range right there. But right now, this is still here. Let me turn off the fib here so we can see more clearly. This is still the range we're trading in, between basically about, give or take about $30,000 to about $42,000. This is the range. As we're looking at the daily time frame, we do see momentum kind of curving up. We see momentum, the VWAP pointing upwards. Come to the 4 hour. Check out the 4 hour. We do see this money flow really starting to curve. And if we are able to play a little game of red dot, green dot here, let me see if I can find a previous time that we played red dot, green dot, like right here, okay? Where we get the red dot, we come down, we get a green dot, we get a red dot, get a really high green dot. Potentially, we could see the money flow curve to the upside. If we come down and keep printing the higher green dots, the higher red dots, that's something that could happen. Obviously we can't just look at this alone to determine which way price is going to go, but it's not looking too bearish. But the one thing I would point out is we do technically have a bearish divergence on the VWAP, where we have this high right here on the VWAP with this high here, and then we put in a lower high on the VWAP with a higher high in the price action. So honestly, things are kind of unclear, indecisive for me, just using Market Cipher. We do on the 3 hour, we have had the money flow cross from the purple into the blue. But same deal, we have the bearish divergence on the VWAP here. Go down to the 1 hourly, and we've got the money flow crossing over. Really, I think what happens here is really going to determine how this plays out moving forward. We see clearly the bearish divergence, which really, we could... no, actually, I'm sorry, we can't pull it from there because that was a higher high. But I mean, this is a pretty blatant bearish divergence here. Yeah. So to be honest with you, my overall sentiment right now, as far as where the market is going to go, is pretty neutral, and I think we just need to mark our levels on the chart and play it as we come to our levels. Yesterday, I was in that short, as I'm sure most of you know. And it wasn't a bad short until this candle came, right? Until we got this massive 7% pump to the upside. So what did I ended up with? Like a 2% move to the downside, and then a 7% move to the upside. It happens, y'all. That's why we lock in our profits and move our stop loss to profit, and we don't enter a trade unless we get our confirmations here. But all right, let's get into some levels. Let's start in the weekly time frame. Let's turn everything off except for our weekly levels. So these levels, guys, by the way, they are in the Discord. So if you come into the Discord and you come to trading levels, I have put them here. The Bitcoin, the Ethereum levels. If you click them, they should all load for you. And I mean, I know the chart looks sloppy. But I'm pretty sure you can import these into your chart, and once you do, then you can organize them into folders and stuff like that, and turn them off and on after you organize them. If you have a problem with that, let me know, or if there's a better way for me to do this, also let me know. Okay, so our weekly levels are right here. First, we have the weekly right up here at 60,000. 27.50 cents, and the reason I have this as a weekly level is because this is the highest place that we could get the weekly candle to close. Okay, so and then under here we have that next after the all-time high when we tried to come back up and put the higher high, and we failed to massively. I have that as a weekly level at 58.225, and then right here, this candle, when we had our little our February dump, right where the weekly candle closed and opened, I have a weekly level right there at $45,107. Then I've got a weekly level here at 39,061. I mean, it's just very clearly a level right here. That's the high ever since we've been ranging down here. This is the highest that the weekly candles were able to go, right here at 39.061. So that's a very significant level that we need to keep our eyes on. And if I zoom back out, then I have 32.200, and that's because back in January, that was the lowest that the candle bodies could close at. In fact, now that I'm zoomed in here, it looks like potentially I marked this level wrong. So let me fix this a little bit here. Yeah, let's fix this level here. 32. Yeah, it should be higher. It should be a little bit higher. Sorry about that, guys. I actually have it marked right on my chart, but it's in the wrong spot. So here, let me move that up a little bit. Sorry about that. 32. I had 32.222. Yeah, let's zoom in as much as we can here. There we go. 32.285. Let's do 32.285. 32.285. Okay. Go ahead and lock that baby up. Zoom back out. And then I have another weekly level down here at about 19.164. Simply because after we break out of 20K, we really have nothing during this whole run up here. And this is the last place where we really see the candle bodies. You know, we have the close right here, the open right here, and we try and wick down below this level and are unable to. So these are the weekly levels right here, and I'm sure that possibly there might be more, but after looking at my chart, a lot of times they were overlapping with other levels, and so I don't like to have two levels that are the same. So these are the ones that I'm currently using right here. So now the dailies. Let's do the dailies. Okay, so go to the daily time frame here. First of all, we've got this level right here at 49.924. This is the reason I have this level marked here. Is, well, we can see it coming all the way back to the day of February 14th. February 14th, the day that Ethereum hit $2,500, by the way. I don't know if you guys remember that day. It was a good day. And then we could see it acting as resistance, support, right? But really the reason I mostly have this level marked is because right here, as when we broke out of the head and shoulders, we tried to retest that head and shoulders and were unable to. And because we were unable to for 3 days in a row, 4 days you could say, 4 days in a row to defend that level, I think it's a very significant level on the daily time frame, because this is the price that we were unable to close above, and that caused a massive move to the downside. In fact, I'm pretty sure this right here caused Elon Musk to tweet. I might be mistaken about that. Then we have the $40,622 level right there. This goes all the way back to our January high. This is the highest that we were able to close a candle after the 3 days of wick time. And then, of course, back here in the future, we can also see that this is still respected. We're very unable to close a candle above this line here. So that's a good level that we need to keep our eyes on, potentially for a good short position. Then I have 33347 as a daily level. This is the daily level that we've really been trading a lot recently. And the reason I have that here is because, you know, we wick right down to it twice, and then we have a candle body open right here, and a candle body close right here, a candle body open right here, another wick right down to it for a nice bounce. In fact, this was a long that we took, I think, I don't know, however many candles ago this was. Of course, we've got the daily at 33.85, which comes all the way back to here. Right, these candles right here, perfectly opening and closing on it before we get this massive move to the upside, showing that this is indeed the support, a very important support of the low of this range, and of course all the wicking down to it as well. And then, after that, we have the 26,202 level. If we zoom in here, we can see that these candles are unable to come and close below this. And if we take a zoom out here, we can really see that on the way up, there's really not much. There's not much that we have here. Just these 4 days of consolidation right here with this level. And other than that, it's just a straight up shot. And then, of course, we have down here as well this 22,710. The reason this is a level of support is because, when we zoom in here as well, once we broke 20K, we had a little bull flag thing going on here for a while. And this was the low of that consolidation as far as candle bodies closing and opening right here. Okay, so those are my daily levels that I've got going on right now. I think, do I have any lower than that? No, I don't have any lower than that. Not for right now. I don't think it's relevant for us right now. Okay, so those are the dailies and the weeklies. Here they is. The dailies and the weeklies. All right, so now let's take a look at our macro volume. This pretty much has not changed since last time. A lot of things have not changed since last time, guys. Because we've been in the same range. All our important levels are the same. We still have the same global value area high. Here, let me turn this stuff off so that we can see more clearly here. This is the global value area high, meaning if we're going to look at all of the trading history on Bybit, this is the, sorry about that, guys. We're getting a 1 hour green dot on Market Cipher B. We're getting that. So really, to me, this is, we're going to see now what happens. Are we going to print a higher momentum wave and really pump up there? Or are we going to print a lower momentum wave and just start to see this direction down again? We will know soon. And yeah, okay, so back to the weekly here. This is the global value area high, meaning this is the last price where Bitcoin is considered at fair value, because the way this thing works, this visible range right here, and if anyone's unfamiliar with how we get the visible range, you go to indicators and you go to visible range. And what this does is it's trying to tell you, based on the volume that was traded, what is a fair price for the asset. And so what it will do is, you can see on the side of my screen here, there's some candles right here, some volume candles right in this area that are light, and then up here there's some volume candles that are dark, right? They're not as brightly shaded. It's almost like somebody made them a little bit more transparent, right? If you could change the transparency. And the highlighted candles are showing us what is considered a fair value for Bitcoin. So below, if we're looking at all price history on Bybit, below 4,000 and above 50,758 is considered overbought and oversold, and then anywhere in between is considered fair value. The most fair value is considered 9,416. And the reason why this is important is because if we now start trading above this fair value level, eventually Bitcoin now becomes normal for a fair value of Bitcoin to be higher than this 50,758. And that's very important, because now it means the fair value for Bitcoin is up here, which means, we can expect price to correct and trade within these higher levels. So this is a very important resistance. If we're able to actually start trading above here and holding here, like on the daily or weekly time frame, then we can expect Bitcoin to come up to, potentially all-time highs. Then we also have here in our macro volume, the reason I call this macro is because what I'm doing is I am taking a fixed range. What? That's not right. That is not right. Let me see here. What I want to do is, because we have established what a fair price for Bitcoin is and where it's valued fairly, what we can do now is we can analyze the price action that Bitcoin traded once it lost this important support and fell back into this range. Okay, and then we can basically do the same thing that we did globally, looking at all the price action together, determining this marked the ceiling of the fair value, to then zoom in a little bit and say, okay, so once Bitcoin lost that red line, what is the fair value of Bitcoin within this chunk of price action right here? And so again, we pull out a fixed range. The fixed range is different than the visible range. The visible range will show you all the price action on the screen. So if you zoom out, the visible range on the side here will take into account all this price action. And if you zoom in, the visible range will take into account all the price action on the screen. But if you want to analyze a specific chunk of price action, then you take a fixed range, and then you can decide which price action you want to use. So I'll take the fixed range. We're going to pull it from the time that we fell below this value area high here, and we're going to click our mouse, and then we're going to take it all the way to where we're currently at. And what this does is this gives us a range here where we have a value area high, we have a value area low, and then we have a point of control. And again, it's telling us that between where am I now? Yeah, okay. Bear with me, guys, because I am I'm a little bit messed up right here. Hang on. What happened to my... What happened to my, hang on. Oh, here we go. Okay. Yeah, this is what I want. I'm pulling it from back here as soon as we lost that level. I'm pulling it from back there. Okay, sorry about that, guys. Sorry about that. And you can pull these from different places too, because it will give you data regardless of where you're pulling it from. But okay, let me turn this thing off here. So from the time that we first fell below this important level to our current price, let's see here, it's showing us that we have an area, a value area high and a value area low, where we should be expecting Bitcoin to find some support or resistance. Okay, so I do need to update this. I thought I did this morning, but I did not, I suppose. So we have right here a value area low right now of about 32,553, about 32,553. That's important. That actually is important. So let's mark that on our chart here. 42, 32, 32. What did we say that was? Let's zoom in here. Take a look at exactly what price this value area low. 32,551. So 32,551. Our value area low is 32,551. And we'll make that 32,551. And then our point of control right here is 36,816. 36,816. Then our value area high comes in at about 40.1. And again, this is just analyzing the price action after we lost that global value area high. And the reason I call it the global value area high is because we were looking at all the price action that was traded throughout the history of Bitcoin on Bybit. Okay, so this is our value area high at 40.1. This here is our point of control at 36.8. And then this here is our value area low. We already have that there. So I just have to update these here, guys, because turn that off. So I guess, you know, these I had the old value areas from previous times on here as well. And I think that I have still included them in the chart that I shared. I'll make sure that this is updated. But a lot of times it's good to just keep an eye on previous value areas, because a lot of times, like we see this old value area low at 31190. Like, just take a look, just an example of this value area low. That no longer is our value area low, but it was back. The reason it's lower now, guys, is because we've been trading lower, right? If we were last week, before we had our dump down to here, we're analyzing all this price action strictly in this, but now we have to factor into account this lower price action. So that's why it's lower now, or high. Yeah, that's why it's higher now, because we're dealing with different price action. But this right here will oftentimes, you'll notice, just act as a level of support. I mean, we wicked right down to it once, we wicked right down to it twice. The candle's unable to close below it here. We come below it, but we come back above it. So it's important to still keep these in the back of your mind. In the back of your mind. So I can now turn off that range. If I could find it now. Where is it? Here it is. So I can turn that off, and then we can just have our value area high, our point of control, and our value area low. And these are going to be acting, guys, as levels of support and resistance. If we're trading below that point of control, it's acting as resistance. If we're trading above it, it's acting as support. These are just levels of support and resistance that you should keep your eye on the chart, because a lot of times we'll be able to catch some good trades off of them, like what we did, I think, yesterday. That's or the day before. I forget exactly when. All right, so now let's take a look at some different price action. We're going to take a look at some different... I'm sorry I keep muting. The thing is, I was cleaning out the chicken coop this morning, and I'm allergic to all the straw with the dust and stuff, so I keep having to blow my nose. So I want to spare you guys from those sound effects here. So now let's analyze some other important volume. We've done this before, but I know there's a lot of new people here. So if you've been here for a while, bear with me. I know I'm going over some of the same stuff. There's a lot of new people here. I want to make sure they understand why we're doing what we're doing, because that's important, right? The goal is so that you guys can do this yourself, and you don't need me anymore. Okay, so now we're going to do some local volume. What I'm going to do is, because this is such an important level, this $42,000 region, the reason it's so important is because if we go back to our daily time frame, we can see that this was the all-time high in January, and then when we got our dump, when we could see this acted as support, right? We could have actually gotten a nice bounce here, a really nice bounce here. Could have gotten a very nice bounce. We could have gotten a very nice from this level. Let's see where we at here. Like an 8% long from this support level. But as soon as we lost this level, now this means we're now trading back in that January range that we've been trading in, since May 19th. And so I want to analyze all the price action within this range. So what I'll do is I will pull a fixed range from $42,000 when we lost it right here, and we are going to then take it to our current price. And this now gives us a value area high and a value area low and a point of control inside this range now. Okay, it's a range within a range that we can analyze. And when you're doing your TA, guys, you can always find ranges within ranges, right? If you find that there's an important level of support that we lose, like say maybe for example, this is just for example's sake, but you have determined that this is an important level, you might now want to analyze just this price action after losing that level. In fact, that's probably a good idea. What I like to do, to be honest with you, is if we lose, let's say, the point of control, okay, like right here, we've lost this point of control. Well, let's see what the volume's like in this little chunk right here, and then I'm sure we can find some good trades off of that. So from here, we have our value area high coming in at 39,307 and 0 cents. We have our POC. We have our POC coming in right at 35,868. And we have our VAL. Our VAL coming in at 33,111. We got our good old VAL coming in there at 33,101. I have a friend named Val, actually. So these are now the local the more local ranges here. And now, guys, while I have you on the phone, you know, before we lose each other, let's actually analyze the price from the time that we lost the POC, right? So we'll take another fixed range. We'll come up to indicators. We'll come to fixed range. We're going to pull it from here to here, and let's see what we get. Here's what we get. We get a value area low coming in at about 31362. We get another point of control coming in right here at about 32751. Then we get our value area high coming in at about 34194. And now, gotta make sure I do this right here. So now what this does is now we have a range within a range within a range. And, you know, this is relevant to us as long as we're trading underneath the POC, right? And if we come back above the point of control of this range, well then, you know, we need to readjust what's going on down here. Right now, it's important to notice that we're trading above the value area high, and we actually came down and retested the value area high, right? We came above it yesterday, and then we tried to come below it, and we actually got a nice bounce off of it. And right now, we can see that we're in a little support and resistance sandwich right here. We've got the 21 EMA on the daily, and we've got the value area high down here. And then we've got the roast beef right here is the candle body, and then this wick up here is the condiments and the pickles and stuff. And this wick down here, I don't know. I don't know, guys. This is not a cooking channel, all right? This is not a cooking show. This is not. I know a lot of people think it is, but it ain't. Okay. So let me just mark these now. Okay. Range from POC. This is the range from the POC. And I did PCO instead of POC. This here is going to be our val. 31.3. And remember, guys, you have to update these ranges because the more price action that transpires, this will change these levels. And then right here we've got our VA coming in at 34,194. Boom. Okay. Gonna put these in the folder. Right there. Right there. Right there. And right here. And so now what I've done for myself is I can turn on all the volume that I just made right here. So this is a lot of levels, okay? You won't want to have these all on the chart at the same time, obviously. But it can give you places from which you can look for bounces, right? If you notice we're coming up to a level and we're getting bearish divergences, well, it's a good time to look for a short. Or if you see that we're coming down to a level and we're getting bullish divergences, well, it's a good time to look for a long. And of course, if we turn these all on at the same time, the chart looks extremely sloppy. That's why we don't keep them all on at the same time. But if we do see a level that we're looking at, we'll set an alert there so that when price comes to that level, we know. And we can keep our charts looking pretty clean. We can keep them looking pretty dang clean, guys, which I enjoy. I'm a clean charter. People don't know this about me. I am a clean charter. Okay, so that's it pretty much for all the levels. Let's do some fib pulls real quick. So we have, obviously, the fib pull from, let me turn that off, go back to the weekly, from the dump of March 2020 to the all-time high. And yeah, again, this is what we're looking at here. We've got, let me just even delete this folder here. There's some important levels to note. First of all, we have the 0.5 fib level, which has been holding as our support, okay? So this is the 0.5 fib, Corona dump. That's important. We have right in here in the golden pocket, I would say at 26,164 is right in the middle there of the golden pocket. That's obviously important. The reason that's important is because The reason that's important is because, this is the last place that Bitcoin can come down to and still technically remain in the uptrend, because usually we will bounce off the 382 or the 0.5 or the 618. However, if we come down to the 618 and we're not actually able to get a bounce off of there and we close below it, it usually means that the uptrend is over, guys. So that's why that's such an important level right there. I'm going to go ahead and make these, give them names here. So this is the 618, the current dump, 618, CVD, and then this is the 0.5, the CVD. Alright, and then, okay, so I'm going to create a new folder for this, important fibs. That way I don't have to have all the fib pulls on my chart. I just can have the important levels, so that if I turn off all my fib pulls, I could just turn on all my important fib levels. Then we have of course, the all-time high to the low. Okay, the all-time high to the low of the dump, which gives us this important resistance, this important golden pocket right here, coming in at about 51.6, and it's important to notice that the 51.6 level is pretty much the same, not the same, but close to our global value area high, right? We see it coming in right around that 618. So this is an important level that we need to mark and make it white and say, okay, this is the 618 resistance from the all-time high. And so now what this is doing is this is giving us an important area of resistance, right? Extremely important. Not only is this the ceiling of Bitcoin being considered fair value, but it's also a 618 resistance. So I'm going to have to put this in here, 618 resistance. And we'll just put it here from all-time high. Oh yeah, it says from all-time high. I better make sure I know what this is. Always make sure when you're doing your charts that you will know what you're labeling things. Otherwise, it can get really sloppy really fast. Okay, Bitcoin's at an important fib level right now. Okay. What's another important fib level? This is another important fib level, guys, because this right here was a swing high to a swing low. Then we come up to a swing high, and then we come down to our next swing low. So this is two swing highs ago, the all-time high. This is one swing high ago, technically. If we're just looking at this as one chunk of move here. This is also an important fib level to have in our chart, with the golden ratio coming in right about 48. The 618 is right about 47.9, 48,000. So we need to mark this as an important fib level. This is the 618 from 59 from 59K to the dump. And of course we have to make that white, because I like white. And I'm not racist, guys, just so you know. I just enjoy the color white for fibs. It's very clean. You'll notice I do use other colors too. Just trying to put that out there. Okay, so 618 from 59K to dump. Boom. Pull this right here. So we have our resistances, kind of marked out for it, these important fib levels on the way up. Okay, let's lock that, lock it and load it, lock it in and let it ride. That's how I roll. So this right here, this is actually our most recent 618 resistance that we're looking at. Now let's zoom into maybe a quattro hour right here, and we can see. Actually, let me unlock this and just kind of stretch it out here. You guys ever stretch out your fib? It's kind of nice, isn't it? It's kind of nice. Here, hang on one second. yeah, the fib sometimes is nice to stretch out. So this is right here our next big fib resistance from this swing high up at the top of the range to this swing low down to the dump. We can see that we've been using the 0.5 fib level as our resistance on the 4-hour time frame. Twice we did that and potentially put in a double top, right? Potentially, guys, potentially. At least on the 4-hour time frame, that's where the candle bodies close. So right here, our 618 is coming in at about 36.5 to 36.8. So I'll just put a line in the middle of that thing and make it 618 resistance. 618 resistance. Okay. I spelled resistance wrong. That's okay. Spelling doesn't matter as long as you know what you're talking about. As long as you know what you're talking about. So we'll lock that. We'll make it here, and I'll put a date. Yeah, you know what's crazy, guys? Today is actually my 8-year anniversary. Wait, is it 7 or 8? 7. It's my 7-year anniversary today. So I've been married to Big Butts 28 for 7 years today. And we're celebrating by having a normal day. We're going to reschedule our celebration. We're going to reschedule it. So this is our most recent fib resistance right here at this 618 level. Just an important resistance to keep in mind, right? If you see prices coming up here, definitely a good area to be looking for shorts. Okay, definitely a good area. Okay, so that's pretty much all that I think is relevant. I mean, obviously, we had this thing going on yesterday from here to here with our 618 coming in. And of course, this is how we were able to enter the short yesterday, because the 618, you're usually going to get a reaction off of it. And we can see we get such a clear reaction off the 618, right? First of all, we bounced down off the 618. Second of all, we bounced down off the 0.65. And for me, guys, I missed that first short off the 618. We got the second one right here. Overall, obviously, I didn't take all this profit because... Did not take all this profit because I had locked in profit a long way down, moved my stop loss into profit. So, when we get this massive pump, we win the trade, and my plan was to not enter again unless we lost this level. But you know what? We just didn't lose that level, guys. So we don't... I technically did enter a short, but it was a risky short, and I used very little contracts, and I'm currently not in a short right now. But this is a good fib level right here to keep our eye on, because we came above the 786 and then we lost the 786. We back tested the 786. Now we're losing the 786. Let's take a look here. Let's go through our steps of whether or not to enter a trade here. Well, we see prices at our level. How's the 4-hour looking? Pretty bearish. How's the 2-hour looking? It's looking like we could get another green dot here soon. How's the 1-hour looking? Well, the 1-hour is looking like we could green dot pretty soon, but we might not, especially since the 4-hour is printing that red dot. The 4-hour is a strong time frame. Let's take a look at the 24-minute. Do we see any bearish divergences? I wouldn't say we have a bearish divergence, but we definitely have downward direction here. Let's take a look at the 12-minute. I do not see a bearish divergence on the 12-minute, guys. I do not. And on the 6-minute, do we see a bearish divergence? No, we don't. So this would be a trade we don't take, guys. This would be a short trade that we don't take, because we don't have our confirmations. If it happens to dump massively, well, we wait for the next long, right? But if we only take trades that we have our confirmations for, then we're good, right? We're good. That's how I like to trade. That's how I like to do it. All right, sorry about that, guys. I had an alarm go off on my phone, and what do you know? I got a text here. Okay, so that's kind of it, guys, as far as levels go, as far as levels go, we, wait a second, what fib is this here? What fib is pulled right now? Let me go to a higher time frame to try and determine what fib is this. Oh, this is the fib that I was talking about yesterday, right? This is the fib I was talking about yesterday. Okay. So, yeah. So, you know, my plan for yesterday was we were going to reject off of this fib. We got the confirmations. At least I got my confirmations that we were indeed rejecting off this resistance. And my my target was basically, I pulled it from the swing low to the swing high where I thought we were rejecting off of at the time, and so my final target would have been down here. Was that my target? I don't remember. Let me see. Well, who cares? Honestly, who cares? Let's talk about some potential trade setups. So, really, guys, things have not changed very much in the last week. And so, because they have not changed much, really, what the best trades that we're going to be able to take are going to be the high of the range and the low of the range. Short the high and long the low. Now, that being said, it's important to understand the fact that we very well may break out of this range this week or next week. Okay, so just keep that in mind. Make sure that you have your confirmations. If we come down lower than this, you know, in my mind, it's unlikely that we will get another significant bounce. However, right now we're at a very important spot. If we put in a higher low and then a higher high, it is very likely that we will make our way back up to the top of that range. So where are some places to really be looking for the good swing shorts? Because I'm still swing long from down here. Okay, I'm still swing long from down there. And the reason I'm still long from down there is because we haven't come in. I've, of course, been taking profit up along the way. I have my stop loss somewhere down here, very close to my entry. It's a guaranteed win. But the reason I haven't closed out the trade is because I'm treating it as a swing trade from the very low. And my final goal is up here, because why not, right? If we've been trading in this range, and this is the high and this is the low, then it's very possible we could make our way back up there. It's very possible. Who knows? And so, you know, I'm still holding that long. And honestly, guys, if you can hold trades for a while, I mean, I'm primarily a swing trader. I like to do that. I like to take profit up along the way and lock in the win, because it's consistent profit. And honestly, right now, guys, the funding fee on Bybit is actually just paying me to hold this long. I'm getting paid every time the funding fee comes around. I actually get money from people who are in shorts just by holding the long. So it's a pretty sweet deal right now. And you know, the only thing that concerns me is the fact that we put in the lower high up here. But let's see what happens. This money flow looks like it could potentially curve up. So let's put on our volume here, and let's see what we got going on. Obviously, first of all, we would want to, we've got our range pulled right here. That's not the range that I want. Here, hang on, let me turn this stuff off. I want the range from 42K that I had pulled here. Where is that? Where are you? Range from 42K. Here you are. So obviously, right up here, if we can make it up to 35.8K, I would definitely be looking for a rejection off of there. I would definitely be looking for a short off of here. I probably wouldn't be looking for, well, yeah, why not? Shoot for all the way back down at the bottom of the range, but absolutely take profit out along the way. So how I would play this is, if we came up, let's say we put in a lower high here, and the red dot cools off, and then we print a green dot and we come up, and we come back down. And honestly, if we come up above this area right here, like 36.4, and then lose this point of control, then what I would do is I would short as we're losing the point of control. I would set my stop above that last swing high, and I would set my take profits down. Of course, no reason to only shoot for the low of the range, because if we break the low of the range and we break down, you might as well keep that thing rolling for a while. But where would I look to take profits? Well, I would first of all, I would look to take profits right about here, right about 33,400, because whoa, about 33,400, simply because we have a very clear level of support and resistance right there. Look where we wick up. It's our support, then it gets flipped to resistance, resistance again, which this is also the 618 from yesterday. So yeah, like right around 3333, right around there. In fact, if I ain't mistaken, that's a daily level. So yeah, the daily level would be my first take profit for that. My second take profit would be the second daily level. My third take profit, why not, would be this daily down here at 26.2. Because if we lose the bottom of the range, then yeah, I mean, we're probably coming lower. So really, this is probably the trade setup that I would shoot for. Of course, locking it in, guys, along the way. Because that's how I don't lose money trading. That's how I don't lose money trading. I would be absolutely wrecked if I didn't lock in the profits. Like yesterday, I would have been absolutely wrecked. But I locked it in, and over time, even though the gains are smaller, because if you do catch a move and you keep 100% of the trade in all the way down, of course you're going to make more money. But it's not going to be as consistent. It's not going to be as consistent. So I think that's important. So then the second short I would look to take really is, of course, we've got to remember the value area high coming in at 39271. Do I have that here? No. How do I not have that here? Oh, hang on. Here we go. Wait a second. Freaking myself out, guys. I'm freaking myself out. There we go. There we go. All right, so of course this would be another short. But honestly, although we could short this value area high, I wouldn't really treat that as a swing trade. I would not, and the reason is because I do think if we come above here, we're going to come up higher to either the daily again or probably up even higher. I would assume even higher, because we have yet to retest this top of the range up here like we did all the way back when we first lost the level. I would like to see that touched again. And so honestly, the best possible trade setup that we could have here, if it happens to happen, is we come up, right? Probably we'll get little rejections off these levels, right? We will. And we'll come up, and if we come up here and we come into this box, okay? We could come into this box. I would like to see us come into the middle of the box or potentially even out of the box, and then if we lose that box with the bearish divergences, boom. That is just a one-way ticket to short city. So I would enter, you could use, if we come up above 43K and you clearly see the bearish divergences, you could enter where you want. Maybe enter in the middle of the box. The safest entry is when we lose the January all-time high. This is the most conservative entry right here. You put your stop loss above the swing high, and then you take profits back along down the way. And honestly, you might as well, because if we reject off of here again, that's a very weak sign for Bitcoin. And just set your take profits down as we come. Let's put on the weekly time frames at the weekly levels here as well. Yeah, so I would take profit first, maybe at the value area high, then at the point of control, and then at the daily. You could do it how you want to do it. For me, I like to take a lot of profit out early and maybe I might take 25 to 30% of the trade out the first take profit, and then move that stop loss to the entry. And then if we come down below the point of control, I'll probably only have 35 to 40% of my original position in, which is fine because now I've locked in a significant amount of money. And then if we do come down to these take profits, well, it's a huge gain. It's an absolutely huge gain. So yeah, this would be the best possible trade setup that we could take, in my opinion. And of course, you know, we don't have to reject off of here. We could absolutely just blast on through. And if we do blast on through, okay, then we know what areas we're looking to short. We know what areas we're looking to short if we do blast. First of all, we're looking to short this next daily up here at 49. But even before we get to there, we need to remember we have this this important resistance right here, this fib level. Hang on, where is it from? Here we go. Yeah, 48K. 48K. That is actually a very important resistance. So if we blast on through the top of this range and we don't ever get our falling back through, then we look, you know, right up into this golden pocket right here, look to short that. And if we are shorting that, obviously make sure that you're not setting your take profits too low, because if we've broken out of this range and we're rejecting off the 618, it's very possible that we'll come back down to retest the range and then get another move to the upside. So if that happens, the way I would personally do it is I would wait for us to come above the 618, lose the 618. I would take out my good old short mix short position, stop loss above the swing high. I would set my final take profit back down to the 42K for the retest, and I would take profit down along the way. So I would definitely take a profit right here at 45.6, just because we have this level right here is support flipping to resistance. So it makes sense if we're rejecting off the 618, we'll come down and hit here. You know, overall that could be a good move. Even if we had this entry, you know, that's still a sorry about that, guys. That's still actually a, let's see, a 3.5% move. And if we do retest the box, that's an 11% move. That's not bad. You know what? Yeah, I'm gonna also post these things in the channel afterward, just because these are things where if they happen, we would want to see them. So let me make sure I save this. This is short from 618. Yeah. Okay. So that's kind of how I would do that. Of course, if we come above the 618, look to short the daily. And then if we lose, like let's say right now, this is the top. This is the top, and then we come down and we lose all these levels. Okay, yeah, I'm sure we could find good little bounces off of this, good little bounces off of here, maybe. But I would really be looking to, the first place I would look to, actually, is 27.7 for a potential bounce, because we do have this this low right here of the all-time January low is 27.7. The all-time January low is 27.7. We can see this wick right here, so potentially look for a bounce right here. This is an important level, 27.747, because this was our resistance in December, then it got flipped into our support, and then we wick right down to it on January 4th. And so, potentially, we could catch a nice bounce here as long as we get our confirmations, our divergences, and stuff like that. Then I would definitely look for a potential bounce here on the way down, where if we bounce from this level, be looking to come back up and retest this area, this January low, and you know, you put the stop loss below the last swing. This would not, in my mind, this potentially could turn into a swing trade, but I would definitely take a lot of profit out as we're retesting, back testing that January low there, the low of the range, which is still a nice 3.6% move right there. Okay, so let's do this as the 27.7 bounce. I would not be expecting a huge move here. but it's just something that we need to keep our eye upon. And here, let me actually move this 27.7 January 4th low. It's important to keep our eyes on there. Okay. Of course, then the next daily level right down here at 26,202, which, by the way, is also the right smack dab in the middle of the 618, the golden ratio, for our entire move from the March 2020 dump. Okay, so I would really be looking for a bounce off of this $26,000 level, and if we do get that bounce, then of course we enter. As we lose it, we reclaim the level with the reaction, the chickens drink the water, and I would target, you know, that January all-time low for a back test. That's how I would do that right here. And honestly, like I would still put the stop loss below the last swing low if we come down here and do something like this, right? Let's do this long from 26K. Definitely a great trade setup. These trade setups here are the ones where, you know, we can be pretty confident that they will be good. And I mean, if we lose 26, I'd be looking for a long off 22.7. And the same deal, basically the same deal where we're just looking for our confirmations on the way down. And really, you know, we could short, like, here's the thing. If we're losing the range, I know, like, a lot of us will short it down if we're losing this January all-time low. It is riskier, though, because we don't know, like, where the bottom is, right? It's easy to tell where the top is if we're coming up. If we're coming up and we get our bearish divergences. But if we were to enter long now, it's like, well, how do we know we haven't already longed into the top? We don't know. So it's the same as like when we're losing something. We don't know if we're shorting into the bottom. It's much riskier. But if we are coming up, you know, we can see the divergences for that reversal to catch a nice entry. And the same if we're coming down, we can see the divergences to catch the reversal. If you want to short the breakdown or long a breakout, what I like to do is I like to break above a level, retest it, and then continue upwards and enter on the retest. Enter on the retest. If we come above this point of control, for example, we come back down and bounce off of it with good momentum on Market Cipher B, that's where I would long the breakout. But just breaking out in general, I find that I've lost more trades doing that than winning. And you don't really have a good reference point. Obviously, we can look in hindsight and see where it would have been a good idea to long this breakout. You know, we could have longed 3 breakouts in a row, but I'd rather have just shorted the resistance. We could have done like 1, 2, 3 times here, 4 times here. That's just my style, guys. That's just my style. All right, so that's really it for the Bitcoins. Let me go into Ethereum right now. Let me go into Ethereum. Ethereum. Let me turn all this stuff off now. Oh, and of course, guys, you know, in the short term here, we do have a very clearly defined little range here that we've just officially now broken out of and are retesting. Okay, so, you know, be keeping an eye on these levels here for trades in the medium short term. Okay, and then we still have our hang on, that's a value area low. Yeah, where's that range again? Right here. Yeah, okay. So, you know, keep in mind, guys, keep in mind that because we have the range within the range, we need to keep all these things in mind. So definitely use this in combination with Fibonacci and stuff like that. That's how I do it. That's how I do it. Of course, you can do whatever you want. All right, so this is my my working Bitcoin chart here. Let's go to my Ethereum chart. Ethereum. No, hang on. Go to chart. Load a layout. Okay, so this is everything. Let's remove it all. And let's just take a look at some stuff here. First of all, let's do our daily and weekly and lower time frame levels here. So let's turn off everything except the weeklies. So these are my weekly levels for Ethereum. There's less because, you know, Ethereum, we just had this voot voot. We had the old voot voot. We see we're coming down on Ethereum, and we're putting in, you know, it looks like we put in a double bottom here on the VWAP. Also putting in somewhat of a double bottom in the price action. So a lot of people are looking at this as a W, potentially. Okay, however, when we look at the Market Cipher B, we can see that we had that massive weekly bearish divergence. We zoom in here. Money flow is starting to curve back up, but in general, it's heading down. In general, it's heading down, but starting to curve back up. So we got the weekly level coming in at 2702, 1944. That was an interesting year, 1944. I don't know if you guys remember that. 1688, that was a long time ago, and then 682. These are the weekly levels that I'm dealing with here. The dailies, I have one at 2240. I have one at 2532. I have one at 2556 and 40. Wow, can you believe Ethereum was that high? Wait a second. Why do I have a daily level here? Wait a second. Hang on. Oh wait, I know why. Because we weren't on the right time frame. We were not on the right time frame. All right. So yeah, these are my daily levels here. The reason I have the daily up here is because this was really the last attempt to come higher, and this was the level that the candles closed. Of course, we could put one up here too at about 41.78, but really I would much rather keep this level here. We've got one at the 28.56 because we can all see why. Right here, we've got this daily level at 25.32. Hang on, wait a second. Why do I have this level exactly? I would move this down a little bit. I would move it down a little bit. This 25.32 level, I would move it down to right here with these candle bodies. So maybe 25.20. 25.20. 25.20. Give this a lock. And then right here, clearly we've got this level being as our strong support, and then flip to strong resistance with the candle body open close right there. So these are my weekly and daily levels for Ethereum. I have some others here, just some other 4-hour levels, just other significant levels of support and resistance. I have one right here at 21.37. I don't know why it's yellow. It should be green. Also, I have some other levels marked out for Bitcoin as well on the chart that I shared. I didn't go over those because these are just for like smaller trades, right? 21.37. Go ahead. Yeah, so I have one at 26.21 because of all the times that this was respected as a level of support and resistance, and same deal for this down here. This was respected many times as a level of support, even going back to before that massive pump. This was a resistance for a very long time. They got flipped into support. So these are the levels here. Now let's go over some volume, okay? The volume, let's start on the weekly. You know, let's do the same thing we did with Bitcoin, where we just turn on our VPVR indicator and we have our global value area high at about 3311. Yeah, we have it coming in at about 3311. Yeah, let me change this now to 33.11. Did you guys hear that rooster? He got out. He got out. And I can't get him back in. He got out of his little fenced-in area. I have no idea how. But in my attempt to get him back in, we got into a little tussle. And now he's kind of scared of me, poor guy. So I'm hoping I can go back out there later with some food and reconcile with him. Okay, so let's see. Yeah, this is the global value area high, very significant level. Of course, we have the global point of control, which is also a very significant level. Do I have the global POC in here? No, this is significant, guys. The global, the 1801 around here. Let me zoom in here. This is a 1793 global point of control. This is a very important resistance, simply because look at how it's been respected. Look at how it's been respected. Looks like I messed that up a little bit there. Let me just move it up just a smidge. Yeah, okay. Yeah. Yeah, these are two important levels to have marked out in our chart, because really this is all that really matters in well, I shouldn't say all that really matters, but this area right here is really going to be the primary importance moving forward. If we lose this global POC, then we're going to come down into lower levels. Hang on, guys. I got to text my dad real quick because he's sick. I hope he's okay. And then we have our let's pull a range. Let's pull a range from the loss of the global value area high, and this is going to be basically the same thing that we did for Bitcoin, where from the time we lost that global value area high, we're going to just pull that thing, whoa, not draw on the chart, but we want to pull that thing from the loss of the level to our current price action. And this is now going to give us a point of control, which is going to be coming in at about right here, 2587. And then we've got our value area low coming in at about 2234. We have our value area high at about 2871. Okay. So these are the areas really that we're going to be looking for. We've lost now the value area high for Ethereum, and so if we come back up here, be looking at this for resistance. And now let's analyze a little bit of volume down after losing that value area low. Let's analyze the volume down there. So I'm going to go ahead and pull a fixed range from, let's see here. From the time that we lose that value area low, let me zoom in to our current place here. And now we've got ourselves a nice range within a range where we have our point of control right here. We have our value area high right here, and we have our value area low down here. Keep in mind, we have come above this point of control. We've retested it, and now we're heading back on our way upward. So it'll be very interesting to see what happens as we move on. We've also come above the value area high, and technically we retested it and came back above. So it's a good sign right now, as far as bullishness goes, that potentially we are going to come back up into this old range, right? But definitely keep your eyes on this value area low, because look, we got, rejection, rejection after it was our support for so long, support, support, and then resistance, resistance. So really be keeping your eye up here. But let's see, under value area low, enter. And yeah, I'm going to turn this off for now. Let's now take a look just at our VPVR indicator in general. I have some high volume areas that I think we should keep our eyes upon. So if we turn back on our VPVR, right here, I see that we have some important high volume nodes. There, let me mark them out. We've got a high volume node right here, which is right around 2416. We've got a high volume node. Is that the only one I have marked? Can't be. Cannot be. Maybe it is, guys. Maybe it is. Yeah, I just want to mark out some important high volume nodes. 2720. 720 high volume node. Move this down to the volume. I think it's kind of all I really see for now within this range here, and those might line up well with some of our others. Yeah, okay, I'll turn this thing off. And then, of course, we have our fibs. We've got our fibs. Before I do the fibs, we have some interesting trend lines here. We're trading within the triangle, right? Trading within the triangle. We lose the triangle. And now I noticed that we have this other trend line coming here where we're respecting this thing as support, 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 support. Okay, you see this? If I turn off the triangle, wait, no, I want that. If I turn off the triangle, we can see that we're just, even within the triangle, we're using this as our support, as our support, as our support. And I guess you could say we had a head and shoulders on that line. And then we lost it and it became our resistance, resistance. Then we broke through it. And so now, I think this is important to notice that we're just trading now above a trend line that we had lost. And we have an SR flip right here, as long as we can hold above here. So the triangle is pretty much irrelevant now, but it's just important to notice that we are breaking down out of a symmetrical triangle. So, technically, if we come down any lower, then I think we're going to come down more, because really we had this swing failure right here where we came down and we came lower than this last low, and then we got a massive reaction off of that. We put in a higher low and formed this kind of W shape here. So potentially we could come up, but if we lose that trend line again, and if we lose this low right here at about 1701, then I do think we're going to be coming down more. So I have those trend lines here. Then I have right here, just this is some stuff I was working with just a few days ago, where I pulled a fixed range after losing the value area low. We already took a look at that. I have this fib here pulled from this high, this last swing high up here down to this low. And we got some nice shorts off the 618. Now we're above the 618. It's important now that we hold that level above the 618. Let's see, what other fib pulls do I have here? Let's take a look at the all-time high of Ethereum to the low of the dump, just so we can get an idea of some important resistances if we are going to head back up. We've got this right here, 34.12, right in the middle of the golden pocket. It's the golden pocket from the all-time high to the dump. 618. Yeah, we got that. Okay. And then let's take a look at 4170 to the dump. Again, 4170 right here. This is important because after the all-time high, this is the first higher low. And so we've got our golden ratio for that coming in right around 32.62. And remember, guys, anywhere the 618, the 0.65, even the 0.66, if you do it that way, you can look for rejections off of all of these. I'm just putting these lines here for a reference point for me, so I don't have to have all these fib pulls on the screen when I'm looking at it. I can just say, oh, we're coming up to a 618. Golden ratio from 42 to dump. Okay. Go ahead and give that a lock. Then I have here, this is from this last swing high that we had up here all the way down to the dump. So I'm pulling this one from 26.31 down to about 17.05. And so the next 618 resistance that we have coming up is going to be up here at about 22.96. Okay. Okay, so then we have this here, 2260 to the low, and 2260 was coming in. That's the same thing. No, it's not the same thing. I had from 26. Then I had from 22. Oh yeah, okay. So this one's basically irrelevant now as far as resistance goes. Yeah, so these are some resistances on the way up. If we lose, you know, because Ethereum now has been trading, we could say, is a little bit more difficult because we don't really have the same thing that we had for Bitcoin where we're trading within a clear range, but we can see we have a high of a range here. Here, let me turn this stuff off. Turn it off, turn it off, turn it off, off. Kind of got the high of our range up here, and we've got the low down about here. Let's say, yeah, right. Yeah. Let's take it from that first low. No, let's take it from here. We got the low of the range here, the high of the range up here. Let's quickly take a look. It's just doing this by eye here, but yeah, okay. Yeah, so if we lose 1724 level, you know, then we just look. Man, see, it's tough. Where are we going to look for a bounce when we lose this? We would be looking for a bounce. Honestly, important. So some important levels. You know, let's just take a look now. Let's take a look at this lower area to get some old daily levels, the ones that we were trading before this huge pump. I mean, very clearly we've got one right here. It's an important level, right about here. I'm going to mark these. This daily level 1375, and that was the top. That was a very clear resistance that we had, right? Resistance for a very long time. We'd be looking for a bounce from there. Also would be looking for a bounce from right here. This was an important support that we had, 1042. Okay. Yeah, and then, you know, after that, we really don't have much. We really don't have much after that. Perhaps we could put one at 757 right here. This is a daily level, 757, where it was resistance for 1, 2, 3, 4, 5, 6 days. You know, it seems crazy to think about Ethereum this low, but it's really not. I remember, you know, just in the fall, Ivan on Tech talking about $800 Bitcoin, you know, by September, or maybe that was the summer. No, it was the fall. Maybe he said by November. I don't know, but it seems so far away. It seems so far away. An $800 Ethereum at that time, and I'm like, nah, come on, Ivan from Tech, Ivan on Tech. Okay, where are we at? Here we go. Yeah, so if we lose this here, guys, you know, I would be looking. Really, what we should be doing on the way down is looking at previous lows, and you know, obviously we could look for a bounce from like 1542. We could look for a bounce from here, you know, but then these other levels I think are more important. They're more important. Let's real quick see if we can pull a fib on Ethereum, just out of curiosity, from the March 2020 dump to the all-time high, and see what we can see. Wow. Okay, so we're at a very, very critical level, guys. I would, you know, if we lose this 618, look for the bounce off the 0.65. If we lose that, let's see. Okay, so we got a daily level right here at the 786 as well. You could look for a little bounce from there. But this is an important place to be, right? If this is not the continuation of the uptrend, I think we will probably go into the downtrend. Another thing that's important to remember is Bitcoin and Ethereum often trade together. So if you're in a sweet Bitcoin bounce, it's very, very possible you could just also long Ethereum, and it's very likely Ethereum will also be coming off one of these same levels here. So, yeah, let me pop into the chat here, and I will update all these charts and put them into the Discord, because I know the ones I have there, I've had to make some changes. So, what's going on, everybody? IB free, yeah, I will do my best to show them in the object tree. RB Smith says Bitcoin is going to 11K, very possible. Wait a second, RB Smith, I thought that you were bullish, man. Thank you guys for praying for Big Fib here. Okay, what time frame do you use for last swing low to last swing high? Sebastian, I don't really look at specific time frames, and the reason for that is because it doesn't really matter as long as you have that price action in there. So like, you know, I'm literally looking for the highest point and the lowest point where you see a very clearly defined V shape. Okay, so you know, if we're pulling a fib from this swing high right here to this swing low right here, it doesn't matter what time frame I'm on. I could be on the 1 hour, and we could still see very clearly that we have at this level a swing high right here. This is the highest point in the move, right? We had one from here. You could say swing high, swing low. You could say swing high, swing low. Then we have our swing high. We have a very clearly defined swing low. It doesn't really matter the time frame. If you're looking for a smaller move, right? Let's say now, like that you're looking for. Okay, so let's say that you're looking for a bounce in the middle of this move from swing high to swing low. Let's say you're looking for a trade in this area, okay? It's kind of a okay. So we have it's hard to say because right, the swing low is always going to be changing on your way down. it's always going to be changing on your way down. So if you see that we're getting a reversal, that's where you pull out the fib, and you pull it from here to here, and you would say, okay, where can I look for a bounce off of? As you see, we're starting to get the reversal. You pull the fib, swing high to swing low, and what do you know? We zoom in there, and we're getting a perfect rejection now off of the 382. Perfect in every possible way. That's just a nice one. So the time frame doesn't really matter. It's swing high and swing low that matters. Okay. Whoa, I don't want this. I don't want that. So RB Smith, I want to have RB Smith on the channel. This guy has some interesting stuff to say. So Anthony Christopher says, question, comma. I understand all of the support and resistance and marking levels, but when we get to a level and I'm unclear of what time frame I should be looking at to enter, what confirmations do I need? Okay, my friend, let's talk about that. Yeah, oh, Andrew also brings up a good point. You can pull many different fibs, okay? If you're looking for, like, for example, like what we did here for Ethereum and for Bitcoin, where we could pull a fib from the all-time high to the all-time low. We could pull a fib from that second lower high to the all-time low. We could then pull a fib from this swing high right here down to this swing low. And this is something that, you know, I go over in the course where we're going to be looking for confluence with our fibs. Like if you see that there's like a 618 that lines up with a 0.5 or a 618 that lines up with a 0.382, you know, those are going to be stronger fib areas. Fib areas. They're going to be stronger fib areas. Shout out to Bojan. Thanks for being here, bro. So, Anthony Christopher. Okay, first, Sebastian, yes. Even the 3-minute swing high and swing low would be relevant, but just like everything else in trading, the lower the time frame, the less reliable that signal. So the higher the time frame, the more reliable that signal. But I'm sure that there's people out there scalping with the fib. In fact, just take a look at the 1-minute time frame here. Let's just take a look. We have a swing low and a swing high right here. Let's see what happens if we pull our fib. What happens? Whoa, what do you know? Look, bounce off the 618, right? So, I mean, yeah, it works on any time frame. It really does. But I'm sure you could find a lot of places here. You have to, especially on the lower time frames, you have to really know when it's warranted, right? Like, are you going to pull one from this swing low to this swing high? I wouldn't. But if you see a very poignant move, right, then I would. So if I see something like this, where it's very high and then we come down and there's a clear reversal there, then I would pull this thing from the swing high to the swing low there. And what do you know? We get rejected off the 618. And even this thing here, like this swing high to this swing low on the 1 minute, I would pull that fib for sure. I would absolutely pull that fib. And, you know, we get a little short off the 382. And this would be a good place now to look for confluence. Like, pull it from that swing high to the swing low. We could pull it from this one to the swing low. And look for some confluence there. But you know, when you're doing that, you got to make sure that, like, you're paying more attention. Because yeah, it's not as accurate on those lower time frames there. Okay, let's pop back into the chat here. Okay, so the confirmations, Anthony. What you need to do? Check out. Anthony, are you have you taken the course? Because I go through a video of exactly how to do that. But basically, let me see. Right here. This is the confirmations that I go through. Okay. When price is coming to a level, we don't enter a trade unless price is coming to our level. We look at the higher time frames first to determine the overall what direction price is looking to go. Then we go to the lower time frames and we look for divergences. If we see the divergences, we look for a reaction off that level. If it's a resistance, we're looking for a clear rejection, like the candle going up and then being wicked down really quick, or the opposite for a support. Does price drop below the support and then real quick come back above it? That's how we are going to get our confirmations. And so I recommend you check out that video in the course. If you need help finding it, let me know. Did Elon hang up? I don't get it, Raz. I don't get it. Oh, I get it, bro. LOL. That's funny. That's funny. All right, guys. Let me know if there's any other Q's. Maybe I have some A's. Shout out to Time for Agorism. I don't know how to say it. Yeah, Anthony, check it out. Let me know if you have any questions, bro. Let me know. All right, guys. Yeah, some antihistamines. Yeah, I need that. I literally need that. The straw. It gets me every single time. The straw. Do I pay attention to an order book? Personally, I don't, but I'm getting more into doing that. And I'm learning how to incorporate that in. I know it's important to look at the order book. I'm working on incorporating that into my strategy. Dark Horse, do I believe in or mess with Elliott Waves much? Yeah, I believe in Elliott Waves for sure. I don't really use them too much. I follow people who use them, and I keep them in the back of my mind, but really, they're more big picture kind of things, and not so much, where you're gonna enter or exit a trade in my mind. But they're good to know. I definitely recommend you study them. But I am not on the level where I could teach it. That's why I do not. So Raz says, on higher time frames, how many candles do you generally look at? Are you just looking at a handful of candles? On higher time frames, I'm looking at the same thing, Raz. I'd be looking at a lower time frame. We're just looking at market structure. So, if this was the daily time frame or the 1 minute time frame, overall, we're just looking at market structure. What do we see on the 1 minute time frame? We see higher high, higher low, higher high, higher low, higher high. I'm not really going to be concerned one way or another. But what I would say is, on the 1 minute, we are printing a bearish divergence. So if this was like the 1 hour, or if this was the 1 day, you'd be looking for your shorts here. And if we come to the 4-hour time frame, we can see we're about to curve over and print a red dot there. Go to the 2-hour time frame. We're kind of topping out here. We've got the red dot. A lot of times, we play red dot, green dot. Come to the 1 hour. If this 1 hour curves over like this and we get the lower red dot here, then we've got the bearish divergence on the 1 hour. But I really, what you have to do is you have to start on the higher time frames to interpret what's happening on the lower time frames. So like the daily, what do we know about the daily? Well, we're in a downtrend, right? We're in a downtrend, but we know that we've gotten, an anchor wave and a trigger wave on the daily time frame, the VWAP's pointing up. So we know we have some power behind us. We come to the 4-hour time frame. We see we're about to kind of top out on the 4-hour, which should make us a little bit more biased toward looking for shorting. So if we're coming up to a resistance, we know, all right, the 4-hour is about to curve over, print us a red dot, which means we'll probably come down a little bit. And then when we come to our lower time frames, given the fact that we know the higher time frames are about to top out, what do we see here? We see potentially a bearish divergence forming on the 12-minute. Come down to the 6-minute. What do we see? Potentially a massive bearish divergence forming on the 6-minute. Okay, money flow is getting lower on the 6-minute right now. Right, we just draw a trend line from here to here. See money's leaving the asset. Momentum is coming down while price is going up. If we turn on some of our levels, what can we see? Are we coming to any kind of level of support or resistance? Not one that I have marked out. Maybe there's a fib or something that I don't have here. But yeah, I mean, let's say that there was a resistance level right here. That would be a place where you'd be looking for a short. Because I don't have a level marked out on my chart, I wouldn't be looking to enter a trade right there. But that's how I roll. How do you get the percent display that people post in the profit loss wall? You have to do it on your phone, and there's like a, when you're looking at either an open trade or a closed trade, there's like a button you can push. It has like an arrow with a circle on it. Okay, so Jason Simmons asks, do you find that bearish divergences on the 1 minute time frame are valid, or is that too low of a time frame? They're valid if you're scalping. So, like, for example, right, I mean, we get this right here, and you could have entered, like, literally a scalp, limit in, limit out, for a nice, like, 0.75% right there. Or, again, right up here, but you have to be very quick, obviously, and you have to front run them a little bit. When you see that the momentum wave is coming down and we're about to print that red dot, you could technically limit in and get a nice like 0.5% move right there. It's absolutely valid. What I like to do is, because I'm a larger time frame trader, I will look at that bearish divergences forming on the 1 minute as a precursor to what's about to happen. So I see it forming on the 1 minute. Now I'm going to be looking like, okay, is the 6 minute doing it? And I see, wow, the 6 minute has this crazy hidden divergence right here, right? This crazy hidden divergence right here. Yeah, it actually does, right? And the 1 minute is also printing the bearish divergences. Things are starting to look bearish, right? Things are starting to look really bearish. I like to see them starting on the 1 minute and work their way up to the higher time frames. And if I see them on the 12 minute, that's really intense for me. And then the 1 hour, when you see the bearish divergence on the 1 hour, that's how you really know. I mean, look at this, right? I mean, this one right here, we got this, this bearish divergence from here. We got one from here. That one didn't turn out so well. But this one right here, as you see that wave starting to come up, we get a massive drop to the downside. This one right here, yeah, that one did not play out at all, but I'd be curious to see how it looked on the lower time frames there. This was, I think, yesterday when we were getting that massive pump. So Raz, are you also in the course? Because I do my best to go through this, and even if I do even have material on YouTube that's not part of the course, like if you check out my video about the Elon Musk, let's see, come to my channel here. Elon Musk tweets. Where's that video? Right here. I even go over that in this video about how to interpret all the time frames together, because that is very important to interpret all the time frames together. We need to start high and interpret the lower time frames through the lens of the higher time frames. Shout out to A4D Woody. His own Big Butts and him have their anniversary, 17th, next week. Wow, congratulations. Raz, check out the Elon Musk video. Check out the video in the course that goes over my Market Cipher strategy. That's how I do it. Check out those videos. They go into more detail than I could now at the end of this stream. Bill Hyde, the DIY guy, just posted his loss from that bearish div that did not play out. Oh, the one that I just had on the chart? Yeah, that's intense, right? Here's something to keep in mind with bearish divs on the 1 hour. Be very careful if you see the money flow doing this with the bearish div. This is, you need to be very careful with that. That's one of the reasons why last night, even though I shorted Bitcoin a little bit, I did not want to post it because of the money flow crossing over. I forget where I shorted, but Anyway, I was talking to people in the VIP chat that I was short, but I didn't want to post it because it was a very high risk trade, and I had very few contracts on it, 25% of what I would usually put on a trade, and I squeezed out a little profit from it. But be careful when you see divergences. You really want to make sure money flow is going in your same direction. Like this here yesterday, this short, it was riskier because we could see the money flow curving up. That's why I was locking it in so tightly. But once that money flow curves, I mean that's definitely going to give you a pump. Money flow crossing over will give you a pump on any time frame for sure, for sure. Well, I should say that the pump will cause the money flow to cross over, right? It's not that Market Cipher causes these things. Okay, Raz, check out those videos. Shout out to Big Moisture. Yeah, BitBoy, right? He's a silly guy. Let's check him out again. Yeah, look at that. The most bullish Bitcoin indicators of 2021. Let's check it out. I'll check it out later. Wow, this guy lost 75 pounds in 3.5 months. That's crazy. That is crazy. Alright, guys. I'm gonna have to cut this off. Ethereum is pumping. Yeah, it is. It's pumping, but, keep in mind, guys. Keep in mind that although it is pumping, well, yeah, it looks like it's going to keep bumping, actually. But I think we have to come down a little bit at some point. But we do see money flow about to cross on the 3 hour. Start about to cross on the 2 hour. Already crossed on the 1 hour. Let's wait and see what happens with this 1 hour. Are we going to get a bearish divergence? Looks like we're not going to get a bearish divergence, guys. It looks like we're going to keep going up a little bit. Because look at the VWAP is higher than last time. So we'll have to see. Although we do have a bearish divergence here with the VWAP. So anyway, I hope you guys all had a good weekend. I will be keeping you guys posted with TA as I watch what's happening day to day. So peace, y'all. Peace.